Small businesses are what drives this country. And of course, they all need bank loans to grow and thrive. But this is where one small business got really stitched up by its bank.
Today there's a thriving delicatessen business at the old post office site in Forest Row. But back in 2007, it was an antique shop leased by Mark Duncan.
That's 1785.
Mark was to become a victim of the latest profiteering scheme designed by the banks to the detriment of small business people like Mark.
Hello, Paul.
Good to see you.
And you.
Well, we must sort out this loan. It sounds like a pretty terrible mess you've got yourself into.
Yeah, it has been completely. You know, I've been in the business now, the antiques trade, for probably 23 years, 24 years. Been really trading from home over the years. You know, decided that I would probably take a shop. Yeah. You know, in the high street. I was offered a very good shop. So obviously I needed the funds.
Yeah, to
finance it and to buy the antiques, quite high value antiques. Towards the top end of the antiques trade, the things which people still would buy at the time. You see, now I've been with Lloyd's for probably 25 years. My wife's been with Lloyd's all the way through as well, probably 30 years, 35 years.
So you trusted the bank really completely?
Trusted them completely. You know, we'd had, I would say, over the course of 20 years, we probably had 10 loans with Lloyd's.
Goodness, yeah.
Never missed a payment. Everyone had been paid back. So of course we would go to Lloyd's to finance the shop. Basically, we sat there and there was so much talking and all different things they were saying to me, and we came on a figure where I borrowed just under 150,000. That's what I wanted to borrow, and they agreed virtually very quickly. And not any time did I realise at the time that I'd be really penalised for settling the loan early.
The behaviour of the banks to small businessmen, selling them fixed rate, long-term loans, which they didn't understand with dreadful break clauses, is the next scandal which is going to burst on the banks. It hasn't had much publicity yet. The Financial Conduct Authority hasn't done anything about them. But they're going to have to, and the Ombudsman Service is looking at them very carefully. I was
going to close the shop up, sell some of the antiques which are in the shop, trade from home. Where things got so badly, we then decided to put the house on the market. And not until then, when I found out that we had a breakout clause. I mean, I wasn't to know at all. I wasn't told.
None of your earlier loans had had a break clause?
None of them ever had.
And this is the agreement you signed?
This is the agreement I signed.
It's quite hard to understand too, isn't it?
Very much. I mean, I've tried and tried. You just can't understand, what it says there.
And as someone said in the House of Commons, it's completely incomprehensible. You didn't understand that to get out of the loan it would cost you £40,000-50,000?
No, I didn't. Not at any time.
I'm astonished at the amount of people who are now in this trap. Mark Duncan was a typical small businessman. He only wanted £150,000 or so to get a lease on a small shop for his antiques. Quite a reasonable thing. He'd dealt with Lloyd's for all his life. They'd given him loans before. So he didn't look through the small print. He didn't understand what they were giving him. He didn't realise when they fixed him up with this loan that to get out of it, after 3, 4, 5, 6 years, he'd have to pay an enormous penalty. They'd never explained that. Why? Because the bank salesman got a bigger commission for a long-term fixed-rate loan, which made the bank a huge amount of profit. And when these 2 or 3 people from Lloyd's came to see you, they didn't say to you, you do understand that if you want to get out of it before the 10 years are up, there's a massive penalty.
Not at any time, because if that was the case, I would have never taken the loan out from day one.
The Financial Conduct Authority says there are only 70,000 fixed-rate loans to commercial businesses. But they're wrong. Our research at Claims shows that the figure is at least double that. It's probably nearer 200,000 people who are stuck in these dodgy loans. So there are 2 dreadful things wrong with the loan. One, you got locked into a high rate, as it was, because rates were high in 2007, and there was no suggestion that they might go down.
No.
And the other thing is that you had to stay in for 10 years or pay a huge amount of money to them.
I couldn't believe what happened. It was, you know, it was now having to sell my house now because of what they'd, you know, basically come into my home and set me up with this loan, which I had no idea whatsoever about. Yeah. And, you know, and it's really affected my business completely.
Well, I think, Mark, first, you're not alone, but I also think the loan they gave you was very unfair. I think it should be possible to get you out of them. I shall fight very hard to get you out of this loan, and as you know, they're already beginning to waver a little. Banks have a duty when advancing large commercial loans to customers to explain them in detail. They did not do that, and they must pay the price.
I feel like I'm completely, you know, let down with.
You've been stitched up, really, haven't you?
Completely.
These small businesses were borrowing money. They trusted their banks, and they didn't understand the conditions of their loans because they were written in gobbledygook. The bank salespeople got bigger commissions selling a long-term loan, so they talked people into them. It's a disaster. There are people paying 50% of the value of their loan to get out of them. That doesn't make sense. It's greed on the part of the banks, yet again.